Have you bought Bitcoin since the last time I was on?
I had bought Bitcoin when it was in the very early. The whatever 10 Bitcoins I had got hacked because back then there were no exchanges really. There was no, there weren't a lot of exchanges. So that got hacked and I probably lost 10 Bitcoins. And then my wife had bought a bunch when it was at $300 or $800. So we're massively up on that. I haven't bought more. And I've actually thought about just putting 1% of my net worth into Bitcoin because of the hedge you talk about. The thing I've been impressed about and has evolved my thinking on Bitcoin is that it has not been hacked or had a 51% attack or I know it's been manipulated. I know it's anonymous or pseudo-anonymous. So there's all these, edge cases. But the fact that a government hasn't been able to either shut it down or hack it explicitly. I know they can hack, your wallet or hack Coinbase or spoof you. But the fact that the core has not been compromised to me is just extraordinary. Why? There's so much at stake in hacking Bitcoin. The fact that it hasn't been hacked to me is phenomenal. It's the number one target in the world, correct?
So I would separate this in two pieces. One is there is an argument that hacking the actual protocol itself would ruin all the value, right? So the second that somebody goes and hacks it, like the $200 billion of market value goes to zero, right? Because it's no longer unhackable. But with that said, I've had a lot of success talking, especially to institutional investors about this, but I think a lot of technology investors get it as well. So if I said to you, hey, I want to own part of Google's search algorithm, right? You would say, go buy Google stock. If I said to you, I want to own Facebook's social network, you'd say, go buy Facebook stock.
Correct.
If I said to you, I want to own the strongest computing network in the world, which is the Bitcoin network, you would say, go buy, but there's no corporation to go buy. There's no equity. And so what you have to do to get financial exposure is you have to buy Bitcoin itself, right? And so part of what I think is really interesting here is there was a very long period of time where maybe a couple people in Silicon Valley were into this, but really for the most part, a lot of people missed Bitcoin in terms of the amount of capital that could have been put into it, right? Some people got personal exposure, whatever. But when you think of it as just the strongest computing network in the world, and I ask people what's that worth? I don't think you and I are going to be good at putting a future value on that. But if it remains the strongest computing network in the world, I think it's worth trillions of dollars at a minimum, right? And so to put some exposure into it, I think just is generally a good practice.
Yeah. My thesis was, this is what I came to over the last couple of years. Since it did not get hacked and it's still stable, I said to and we had people on this podcast talking about Bitcoin when it was under $1. So just to be clear, I mean, I've been tracking this forever. My belief the last couple of years has been majority chances it goes down to zero or, low hundreds of dollars and gets replaced by a better technology because that's what always happens. Almost universally, some technology gets replaced. Now, there are some that have not, that have become built to last. Email, as an open protocol has, and the web. RSS kind of got deprecated because Google gave up on Reader, and so it doesn't always happen that way. And FTP and Gopher and Send and all these Usenet, other things that were open protocols have gone away or just are not used all that often. But it felt to me like the second somebody made something better than Bitcoin, really better, and that also had the increase in value, then it would be game over for Bitcoin because the people who were hodlers and were hodlers, they would say, you know what? I want to do what I did with Bitcoin. I want to go 10x. I want to go 1,000x. So I'm going to move my exposure over here, and that would start this, degradation of the price, right? And nobody would buy it because there was no upside. So why hasn't that happened? Because I still think I would put it at 50-50 that's what happens.
That analysis would be dead on, except for one thing. This isn't a technology problem. It's a money thing. And so what you have to remember is money is a belief system. Like why will you take dollars from me and I take dollars from you? It's because we both believe that dollar has value. Now, the best way to highlight the difference in what you just said and what I think Bitcoin provides is if you're in a country where your nation state currency fails, like it literally hyperinflation, the whole 9 yards, and then the government comes to you and says, hey, Jason, sorry that happened, but we got this new currency that we created. Just use this one. You are very, very unlikely to believe them on the second one, right? They violated your trust. And so when I think of Bitcoin, what I think of is we being the citizens of the world get one shot to separate state and money. One shot at it. That is Bitcoin. If it happens, tens of trillions, if not hundreds of trillions of dollars in value. If it doesn't happen, Bitcoin goes to zero and there will not be a replacement because it has too much momentum and too much buy-in at this point. It has kind of the mental kind of capture. This is the shot to separate state and money. And so when I think of it that way, it's if Bitcoin was to fail, I actually don't think people would buy into the next one mentally because it would say, oh, you can never separate state and money, right? There's too many people who are seeing this for the first time. And so it's like, we get one shot, hey, all you speculators that are speculating in the public market stuff, don't go put 100% of your assets into Bitcoin, but also don't get caught having zero exposure.
Right. I think that's I think that's a pretty good analysis, actually. And maybe I'll just, after this podcast, go put 1% into Bitcoin. What is it? Wasn't this supposed? This is a question I have for you. Wasn't a world-changing event, a world-shattering event, supposed to be the moment where Bitcoin shined? Well, we just went through this crazy pandemic that I think is the definition of that. A global shutdown that like none we've seen. And there was supposed to be this massive flight into it. And then there was this other reason that y'all kept saying was, oh, you guys are printing so much money, right? Money printer goes burr, or whatever that meme you guys have, and you fight your wars in memes, which I think the VC community needs to learn from. We got to get better at meme warfare in the investment community here in Silicon Valley. But why didn't Bitcoin spike over the last, year? I mean, I know it was at like 6,000 and went up to whatever, 7 or something. Or actually, maybe it's at 9. So shouldn't it have gone crazy or no?
So let's go back in history to understand what's happening now. In 2008, when the financial crisis hit, gold, which is widely considered a store of value, it went down 30% over the summer of 2008. And the reason is there was a liquidity crisis. So people looked around their portfolios and said, the world's ending, all chaos is broken loose. I want to sell any asset that's got a liquid market to it. And so they sold everything, right? They sold stocks, they sold gold, they sold
Scared
everything.
people.
Yeah. And so in response to that liquidity crisis, the Federal Reserve printed at the time hundreds of billions of dollars, right? And then gold 2x'd in value from there, ended up hitting an all-time high in 2011. What we just saw so far and are still in, I would argue, is there was a liquidity crisis starting in March where people looked around the room and sold everything, right? I mean, Bitcoin went down 50% in one day at one point, right? Stocks went down 30%, gold went down 15%, all this stuff. But if you look from the beginning of this year to now, Bitcoin is up 35%. It's actually the best performing asset of all the asset classes, right? It's better than most commodities, better than stocks, et cetera. And so what it's doing is it's hyper volatile. And the best comparison, I think, is if you look at like Amazon, right? So Amazon's been one of the best performing stocks since it went public. It's gone down double digits every single year it's been public. And the average intra-year drawdown of Amazon stock is 30+%. One time it went down over 90% in a time period. And so when you look at that, Amazon stock's been hyper volatile, but it's also led to incredible growth, a lot of innovation. It's been one of the best performing stocks. Bitcoin looks very similar in the sense that it's hyper volatile. When there's times of liquidity crisis, all assets trend towards a correlation of 1. Bitcoin went down, but on the rebound, where we see the Federal Reserve printing all this money, Bitcoin has performed all of their assets. And so if you look at somebody like a Paul Tudor Jones, his argument is, look, I believe central banks are going to continue to print trillions of dollars and inject liquidity into the global economy. I want to own what he called, quote unquote, the fastest horse. And he believes that to be Bitcoin. So he put 2% of his assets, a couple $100 million into Bitcoin and said, I think that this is just going to outperform everything else as central banks just pump these assets to the moon.
When will Bitcoin hit a new all-time high? And what would be the likely scenario that would cause it to do that?
So
Because what was the high?
all-time
20?
high, 20,000. Yeah. All-time high is a little hard. What I will say is, and I've said publicly a couple times, is in 2017, all of these kind of models, right? If you think of how is price determined, it's supply and demand. The advantage Bitcoin has over all other assets is that with 100% certainty, you can verify how many Bitcoin exist and how many are coming in the daily supply. So gold, for example, you kind of sort of know how much exists. You kind of sort of know how much being produced on a daily basis. But with Bitcoin, you know with 100% fact. So really what you've got to be able to do is model out or forecast demand. And if Bitcoin's demand continues to grow how it has for the last decade, it was supposed to hit $10,000 in December or in 2017, and it's supposed to hit $100,000 by the end of 2021. In obviously 2017, we saw it go from over $10,000 to $20,000. It went from 10,000 to 20,000 in 18 days in Q4 of 2017.
Yeah, that was like the holidays, like Thanksgiving and December. I remember my wife was like,
"It's a blow off top."
Yeah, it was incredible, and I was like, "Sell it!" I spoke at that crypto conference down at the Santa Monica airport, and I said, "Listen, I know a lot of you bought this nonsense for $100, and you charge 20,000 now. Please sell half, because this never happens in the world that you have a 10x, 20x, 200x in this period of time. I know you think it's going to go 200x from here. Please sell half and buy a house." And nobody did it. Maybe some people did it. I don't know. Well, I guess there had to be somebody on the other side of the trade, right?
Yeah, what I think happens is it went to 20,000. It was there for 24 hours, right? It's not like it hung out there for a while. Crashed all the way down to around 3,000. I think what will happen over the next 18 months is we're going to see another massive bull market. So we're going to see Bitcoin, go hit $100,000 by the end of 2021. It's going to be the same thing that you saw in 2017. There's going to be mass chaos. People aren't going to sell. They're going to be piling in and FOMOing and doing all this stuff. And so what ends up kind of happening is look, markets are markets, right? We've talked about how many markets today where people FOMO in and they're speculating. So it's just kind of you can warn people as much as you want, but they're still going to speculate, right? Human nature takes over and greed takes over.